Good afternoon, ladies and gentlemen. It is a pleasure to be back in Edinburgh to participate in this event and also to see some familiar faces in the room. Firstly, I'd like to thank the organizers for inviting me to share with you some of Malaysia's initiatives and progress in the past few years in advancing sustainable finance and investment. We have heard from the earlier speakers on the global scale of the current and potential impact of climate change, as well as the real risk to humankind if the issues are not addressed urgently. As Asia has more people in coastal cities than the rest of the world combined, it may not be surprising that Asia is viewed as being more vulnerable to climate change risks than other regions. As many as 15 million people and almost 2,000 square kilometers of land in 7 Asian cities could be affected by extreme sea level rise and coastal flooding by 2030, resulting in loss of income, displacement of communities, and rising health concerns. As we are aware, substantial funding is required to undertake the various climate action initiatives, as well as to support the achievement of the SDGs. Climate change adaptation financing needs for just the developing countries will reach $127 billion and $295 billion per year by 2030 and 2050, respectively. The widespread impact arising from the COVID-19 pandemic has also contributed to higher funding requirements. The financing gap in respect of SDG financing needs in developing countries is expected to increase by 70% to $4.2 trillion per annum post-pandemic. There has been some response in terms of fundraising and commitments. From the perspective of the capital market, we have seen substantial increase in the issuance of green and other sustainability-linked bonds. However, as we are all aware, more needs to be done, and to be done urgently if the global targets and goals are to be achieved. Allow me to now share some of the recent developments in Malaysia in the area of sustainable finance and investments. Perhaps this could trigger and catalyze some conversations later in this forum. To set the context, in September 2021, the Malaysian government announced its target to become carbon neutral as early as 2050. In relation to this target, the government has had a series of commitments. Among others, it has committed to cease building new coal-fired power plants by 2040 and has also tabled plans to introduce carbon pricing. The government aims to deliver on renewable energy capacity mix of 31% by 2025 and 40% by 2035, in line with the Malaysia Renewable Energy Roadmap. And Malaysia has also vowed to reduce by 45% its economy-wide carbon intensity against its gross domestic product, or GDP, by 2030. The importance of transition activities will have particular significance in markets such as Malaysia, where economic development has been spurred by industries that are naturally reliant on resources such as energy and oil and the plantation sectors, as well as others including transport and manufacturing. Businesses in these sectors will need to undertake complex and long-term transformation in order to reduce their emissions and minimize the risk of stranded assets, which will not only be technically challenging, but also require major investments. The Malaysian capital markets sustainable finance journey started in 2014 with the launch of the Sustainable and Responsible Investment, or SRI, Sukuk framework, which over the years has facilitated the issuance of, among others, the world's first green sukuk, as well as several social sukuk for education and affordable housing. In the fund management space, the guidelines on SRI funds was introduced in 2017, while the Wakaf Featured Fund Framework was launched in 2020. These initiatives aim to spur the offering and growth of investment funds that focus on sustainable businesses, as well as contribute towards socially impactful activities that may also support the SDGs. In order to ensure a more holistic approach in developing the SRI ecosystem in Malaysia, the SRI roadmap for the capital market was launched in 2019. The roadmap has identified 20 strategic recommendations around the 5 key areas covering instruments, investors, issuers, internal governance and information architecture, also known as the 5I strategy. The Securities Commission Malaysia's third Capital Market Master Plan, or CMP3, covering the period 2021 to 2025, has also reinforced the priority and focus on further pursuing the SRI agenda for the next phase of capital market development. The CMP3's strategic thrusts include shaping a stakeholder economy, while effective capital mobilization through sustainable and responsible investment and Islamic capital market solutions. In addition, the CMP3 aims to embed shared accountability in the Malaysian capital market, among others, to promote responsible businesses. In relation to this thrust, a key strategic consideration for the Securities Commission is to develop initiatives to enable more companies to transition to a net zero future. These include developing transition financing and facilitating wider funding options for companies embarking on net zero commitments. Therefore, in June this year, the SC introduced the SRI-linked Sukuk framework. The framework aims to facilitate companies, including those in hard-to-abate sectors, to tap into the capital market to meet their transition finance needs, thus enabling them to speed up their transition towards low-carbon emission activities. The framework is aligned with the International Capital Market Association, or ICMA's sustainability-linked bond principles to ensure wider acceptance and recognition, particularly among international investors. To incentivize issuers, the SC also recently expanded its SRI Sukuk and Bond Grant Scheme, which was established in 2018 to assist issuers in defraying up to 90% of the external review costs for SRI Sukuk, to now also include SRI-linked Sukuk issued under the new framework. This incentive is in addition to other tax exemptions and deductions provided in respect of selected components of the SRI ecosystem in Malaysia to encourage the growth of this still relatively nascent market segment. As the sustainable finance market expands, addressing greenwashing risks has expectedly emerged as an important consideration. In this regard, Bursa Malaysia, the national stock exchange, has put in place disclosure requirements which are being enhanced in order to provide stakeholders with timely and reliable information to facilitate decision-making and mitigate this risk. In addition, Malaysia's financial regulators have developed two taxonomies catered for the country's banking sector and the capital market, respectively, as guidance to identify economic activities which are green and sustainable. The Climate Change and Principle-Based Taxonomy was issued in April 2021 by Malaysia Central Bank to guide financial institutions in identifying and classifying economic activities that could contribute to climate change mitigation and adaptation to facilitate their lending and financing decisions. The Sustainable and Responsible Investment, or SRI taxonomy, which has gone through a public consultation process and will be launched by the Securities Commission by the end of 2022, has been developed to enable capital market participants to identify economic activities that are aligned with ESG objectives. This will facilitate a more informed and efficient decision-making for fundraising and investments. The SRI taxonomy also includes social objective considerations, which is particularly important in the context of ensuring a just transition. Apart from developing the respective taxonomies, the Malaysian financial regulators are also of the view that coordination and collaboration are key elements in furthering the national sustainability agenda. In this regard, the Joint Committee on Climate Change, co-chaired by the Securities Commission and the Central Bank, was established in 2019 to drive a coordinated approach in enhancing the Malaysian financial sector's readiness in addressing climate risks. Alongside regulatory and developmental interventions, the SC firmly believes that capacity building is another important area that support and enable the growth of sustainable finance in Malaysia. Efforts to meet current and future capacity requirements are being strengthened through various programs by the SC and its affiliate, Capital Markets Malaysia, for financial sector intermediaries as well as potential corporate issuers. I'm sure many of you would have noted that Malaysia's sustainable finance journey is very much intertwined with its Islamic finance agenda. It is broadly acknowledged that the underlying principles of sustainable finance and Islamic finance are quite closely aligned. This provides cross-leveraging opportunities to benefit from each other's strengths towards addressing global sustainability issues and achieving the SDGs. On this note, I would like to add that we need to get the message out there that there should not be any hesitancy or doubt on the universal applicability of Islamic finance. With the substantial funding needs, as mentioned earlier, the world requires a range of financial solutions that can collectively expand the pool of capital providers in order to more efficiently address the critical issues that we are faced with. As we move towards 2050, we cannot afford to let perfect be the enemy of the good. We are pressed for time, and this is the decade of action. Every one of us is a stakeholder, and every stakeholder has an important role to play, individually and collaboratively. Thank you.